Hello, my name's Carl Cook, and I'd like to give you a little bit of a roadmap of where I see things have been and are going related to our financial products. And I think some of you will be immensely curious. Okay, back in 1995, we created something called the Neurogenetic Optimizer. That's a NGO, a three-letter acronym for Neurogenetic Optimizer. And it's a general purpose modeling regression tool where you have various inputs and you want to predict something, and you use neural networks, and it would search through different combinations of input variables and the model types and architectures to try to create a very good model for estimating something. And that included triple validation on data sets to make sure that the model was robust, and the product was actually and still is selling and successful, and it was used for and is used for all sorts of things. Right now it's used a lot in commercial industrial applications, and things for like predicting whether or not somebody's likely to purchase a product, or packaging for very common soft drinks that we all drink, and for modeling the softness of toilet paper, and the absorbency of paper towels, and the algae blooms of eastern Ethiopia or whatever. It was used for a lot of stuff. And so we were asking people, what are you using it for? Oh, that's cool. What are you using it for? Oh, I'm doing the financial markets. Oh, really? How are you using it? Well, I use various indicators as inputs, and I predict whether or not a stock price or the market indexes will go up or down. And I said, well, then what do you do with the numbers that come out? Well, if they're positive, I buy. If they're negative, I sell. I put them into TradeStation as a date close series, and then I can put money management on it and stuff. So I said, oh, okay. So the NGO is basically a signal generator. And so we've got our first financial market signal generator. But the NGO is based on accuracy, and a little bit of analysis pointed out that accuracy and equity performance are not well correlated, and unless you have almost a perfect signal, then they are well correlated. But no signal is perfect. So we said, okay, one of our employees has got the NGO course, and he's also got TradeStation, and he tries it out, and he goes like, we're onto something here. This is pretty good. And so he could import the signals into TradeStation and look at equity curves, and put money management on it and execute trades and stuff. So very good. But the NGO is accuracy based, not equity based. So we created something that would sit on top of it called Profit, which would set up the NGO to operate more on an equity based, or the models coming back are going to be evaluated from an equity base. And it had very rudimentary equity curve. That was just an amazing thing to have such a equity curve on top of the NGO. And the signals still go out to TradeStation or Amy Broker as inputs to signal, so you can do money management. There's still all our products are signal generators. They are not trading systems. Money management is done with another package or with your brain. So good. Now we got the NGO wrapper on top of the NGO called Profit. And in the early 2000s, we hired a crackerjack master's of science in artificial intelligence and super duper C++ programmer and whatnot, and he created the engine for the NGO properly, object-oriented C++ fairly fast, and so we could take the NGO away from the perspective of having a separate application and actually suck it up inside a Profit. So now you just got just Profit, and this is all running on in the COM world from a technology standpoint, and common object model, compiled binary executables and whatnot. One of the things we learned from profit, though, was that if you build a model on past history and play it forward, since the markets are non-stationary, that model eventually degrades and becomes unusable unless the model is very general. And then it has lots of drawdown. So then you're kind of stuck with, okay, I got to keep an eye on this thing. It's going to collapse, or I'm going to take a lot of drawdown along the way as I make money. So walk-forward adaptation was an important approach to the market. So we created something that was completely different. And it was called Dakota, which is the code name for the product that kind of stuck because people liked Dakota. So we call it Dakota, and it's a walk-forward adaptive trading system. So you actually script a trading system that says if this moving average is above this and the wave oscillator is saying that, then you go long, else you go short, and perhaps the parameters of the moving averages and different calculations in there, they're parameterized, so those are being adapted based on equity performance going forward. So it uses swarm adaptation technology, not swarm optimization. There's a big difference. And so Dakota works pretty well, and then in the meantime, in around 2007, we started on the Intellect 3 architecture, which is a new architecture for us underlying all our products, and it's basically a huge suite of functionality that goes from data access to data virtualization to data pre-processing to modeling and prediction and optimization and decision making and anomaly detection and whatnot. And these capabilities are wrapped in something called a task, which is just a process that receives messages, typically receiving data, does its calculations, and then it broadcasts out its results. And then literally you can drag and drop these blocks onto a workspace and draw arrows between them, and you can create amazingly complicated or simple solutions to do all sorts of things. Okay, I'm going to get this data, then I'm going to put it through this model, and I'm pre-process it this way and filter it that way and put it through this model, and then I've got an output, and I'm going to post-process the output, and I'm going to go write it off to some data historian someplace, and I'm going to make some decisions along the way about taking action or not action, and oh, look, there's something unusual happening over here, so I need to address that. And so you can wire these tasks together using synchronous or asynchronous messaging. And that synchronous and asynchronous is important because if they're synchronous, then you just got this chain of step one, do this, step two, do that, and the whole thing just kind of holds until it completes and it all runs on one thread. Asynchronous messaging means that everything's running separately on its own thread, which means that we can make use immediately of multi-core processors. So like the i7, they have like 8 virtual cores, and so we can distribute across the multiple cores because Windows takes care of the multiprocessing for us. Anyway, we've got this fantastic architecture, which is being adopted globally by some multinationals because it's just good and it's very flexible. And if something you don't like the way something works, you just kind of drag and drop it, rewire it around a little differently, and you got the solution. And 15 minutes is implemented completely a different way. No longer do we have these monolithic applications where everything's hard coded. And so shortly after we came out with the Intellect 3 architecture, we put Profit in there as the first application that was built. So that was Profit 8 was on the early version of Intellect 3 architecture. And then later we said, well, not only do we have predictive modeling and adaptive trading systems, but there's a lot of talk about pattern identification. And in the beginning, I wasn't, or pattern detection. Here we're doing a pattern identification and detection and probability of what's going to happen next. And in the beginning, I wasn't too big on pattern detection and identification. because I see these things. Oh, okay, this is the Head and Shoulders pattern with the banana, extraction with the one shoulder higher than the other, which means that the moon is going to rise at 6 a.m. I just didn't see it myself. So prototyped patterns and took a little different approach about looking at very short-term patterns. As the market go up, down, up, down, down, up, what's going to happen next? If the market goes up, across, down, down, what's going to happen next? And prototyped that, and I went, bang, oh, look at this. Decent equity curves. It wasn't very difficult. And so we created patterns, and it's based on the Intellect 3 architecture. So, okay, we got profit and patterns in the architecture. Dakota's sitting out there all by itself in a old COM binary compiled technology that's difficult. So we decided, okay, we'll move Dakota into the Intellect architecture, and which we are just now completing, and that will be released shortly. And so now we have all these products together on the same powerful architecture that's corporately strategic, that's being used globally for all sorts of industrial processes. And so now we have the Intellect 3 architecture, we have profit patterns in Dakota, all sitting in the same architecture. And one of the things that we notice is people are doing like, okay, I'm going to run Dakota and generate these signals, and I'm going to go over and do profit, and I'm going to generate these signals, and I got patterns, and I want those signals, and then I'm going to pull them back into Dakota, and I'm going to do this kind of processing on them and whatnot. And we said, okay, people are trying to fuse the signals together. So what do? Let's create something called Fusion. And Fusion will pull together patterns, Dakota, and profit, which are all just tasks within the Intellect architecture. So every profit system, pattern system, and now Dakota system is merely a task. And that means we got a block. And we can, maybe in Fusion, we're not finished with the design yet, but maybe in Fusion we could drag and drop. Okay, I got this profit system, I got this pattern system, I got this system. I want to drag and drop, data coming in this way and then they're going out that way, and I want to save that and I want to run that, and I can do that either end of day, or since the Intellect architecture is also RT architecture, we could do it RT. And so now we're looking to create the congruent merger of signals from predictive modeling, adaptive trading systems, and pattern detection, and fuse them together into a common signal. Now this is still just a signal generator. So we would like to have interfaces of coming in. We've got a number of them real time and historical end of day. But then also what's coming out is a signal, and that needs to go somewhere. So then we'll also write interfaces where need be, particularly for the real time, hopefully into other packages where they can do money management and whatnot. So anyway, this is a view of where we've been, where we are, and a brief view of where we're going yet this year. And I appreciate your time and look forward to you joining us or continuing on in this journey. Thank you very much and have a great day.